Welcome back to Real Trading Journey. Over the past couple of weeks, I've taken a few trades that have really stopped me in my tracks. Even though I've followed my process, the losses have just kept coming, and it's forced me to face a hard truth. The problem wasn't my discipline or my entries, it was the market that I've been trading. That realisation has completely changed where I'm going to be focusing my capital from now on. Today, I want to share with you the turning point and the big shift that I'm making. Before starting Real Trading Journey, I built a process that I really believed in. Fundamentals first for directional bias, daily price action confirmation, and then 1 hour entries with structured risk. In June and July, that process worked brilliantly. Currencies like Euro USD and Euro Japanese Yen were trending, and my edge fitted the market perfectly. It felt as though I'd cracked the consistency code. But August was different. Even though I traded exactly how I had in June and July, I started to take a string of losses. At first I couldn't understand why, and when I look back I realised that I'd been profitable earlier on in the summer because the markets were trending. When the trend stopped in the final week in July, I didn't adapt. That was a big realisation. For my strategy to stay consistently profitable, I needed to focus on assets that were trending more often. This led me to explore indices, stocks and commodities. The final straw came with 2 trades last week that really underlined the point: Aussie dollar USD and Great British pound Japanese yen. The first was the Aussie dollar USD. I went long on Monday the 15th after a strong bullish daily price action signal on the previous Thursday. I'd waited on Friday for a further pullback and a fresh 1 hour signal, but it never came, so I stayed on the sidelines. When Monday opened, instead of waiting for a deeper pullback, I entered on a breakout of a previous weekly high. The trade moved slightly in my favour, but on Wednesday, the Fed cut rates. That sudden shift pushed my trade to around 1-1 risk reward in profit. And at that point I should have moved my stop to break even, but I hesitated because the price action around the announcement was volatile. The decision cost me. The very next morning the trade reversed and I stopped out for a full loss of £228.43. Next came Great British pound Japanese yen. The overall trend was up, and although this pair had caught me out with its volatility and my historical tight stop losses, I widened the stop this time, and after a small pullback, a fresh upside momentum through the previous weekly high, I entered. But when the US market opened, the price reversed and I almost immediately got stopped out for £196.05. Both trades followed my process, but both ended in losses. These trades didn't just highlight market conditions, they highlighted a deeper refinement I need to make and how I enter. I've realised I need to be clever from where I trade from. Trading from pullback areas gives me the best value and protects my stop under stronger levels. For a long time now I've wrestled with the idea of never trading against the trend. But the reality is I'll always be trading against some trend of some time frame. The key is to align with a higher time frame structure. Instead of viewing a counter move on the lower time frames as a new trend to follow, I need to view that as a pullback opportunity to join the dominant long-term bias. That insight combined with the losses forced a bigger question. If I'm sticking to my plan and still losing, is the issue really my method or is it the market itself? The truth is that currencies can spend long stretches ranging, and when they do, a trend following daily price action approach like mine is fighting against the tide. The edge isn't gone, it just doesn't match the environment. That's why I started looking at other markets with a fresh perspective. Indices like the Nasdaq and the S&P and commodities like gold behave differently. They tend to trend more consistently and respond more directly to macro catalysts. That's exactly the kind of environment my strategy needs. So here's my refined plan going forward. Fundamentals first, daily price action confirmation, 1 hour precision, discipline management and pullbacks for focus. Use lower time frame counter moves not as the new trends to chase, but as opportunities to join the dominant higher time frame structure at the best value. This isn't about walking away from Forex forever. If a currency pair starts trending with clear fundamentals, I'll trade it. But my main focus now is where momentum lives most of the time, in indices and gold. The lesson is simple but powerful. Even a flawless process doesn't guarantee profits if the market you're trading doesn't suit the process. Recognising when the environment changes and adapting is a skill in itself. If you faced a similar turning point and the market you've been trading has stopped rewarding your process, I'd love to hear how you're getting on and how you've adapted. Please drop us a comment below. Thanks for watching, and in the next episode, let's see how I get on with the new refined strategy, trading indices and gold with full transparency of wins and losses along the way.